All right, if you're gearing up for your exams, you know how vital it is to have a solid grip on the economy. So in this explainer, we're going to cut right through the noise of the latest economic report and give you the absolute essentials, the data, the concepts, and the trends you really need to know. So here's the game plan. We're going to start with the big picture, the global economy, and see how India is holding up. Then we'll zoom right into our own backyard, looking at demand and supply. After that, we'll tackle the really surprising story on inflation, check the economy's financial pulse, and then we'll wrap it all up with the key takeaways you'll want for exam day. Okay, let's zoom out and look at the world stage first. Right now, the global economy is kind of walking a tightrope. There's a lot of uncertainty out there. But what's really fascinating is that while many major economies are struggling against these global headwinds, the Indian economy seems to be charting its own, much more resilient path. Okay, before we get into the data, let's break down a term you absolutely have to know, PMI, the Purchasing Managers Index. The easiest way to think about it, especially for your exams, is like a monthly report card for the economy. It's simple. If the score is over 50, things are expanding. If it's below 50, things are contracting. That's the key takeaways. And here is where that PMI data just speaks volumes. Look at India, sitting comfortably above 50, clearly in the expansion zone. Now, look over at major economies like France and Brazil. They're below 50, which means they're actually contracting. This right here is what we mean by resilience. India is managing to grow even while others are slowing down. Okay, let's bring our focus back home. What's happening inside India? Well, every economy really runs on two main engines. You've got demand, that's what we're all buying, and supply, which is what's being produced. So let's fire up that first engine and take a look at demand. When it comes to exams, nailing down the key drivers of demand is crucial, and a good mnemonic is your best friend. So we've got one for you that's super simple to remember. Just think of the word fast. So this is what's really putting the fuel in India's demand engine. It's happening fast. F is for the huge boom in festive spending. A stands for agricultural strength, which is really boosting rural demand. S represents a massive sales surge, especially in things like cars and bikes. And T is for the positive tailwind from tax reforms, like recent GST cuts. And if you want to see the S for sales in action, just check out these numbers. Compared to last year's festival season, vehicle registrations are way up, more than 23% overall. Two-wheelers alone jumped by nearly 25%. I mean, you just don't see numbers like that unless consumer confidence is really strong. But, there's always another side to the story. All that strong festive spending has a catch. When we buy more, we also tend to import more. And this time, a huge surge in imports, especially things like gold and silver, pushed our trade deficit to a record-breaking $41.7 billion in October. Now, that's a number you really want to flag in your notes, because a high deficit can put pressure on the rupee. Now, let's switch gears and look at that other engine, supply. And the story here, starting with agriculture, is just fantastic. We're talking record food grain output, reservoirs are at historic highs because of great rainfall, and the winter crop sowing is already way ahead of schedule. And maybe most importantly, our national food reserves of rice and wheat are really comfortable, well above the buffer we need. All right, let's move on to one of the biggest and, frankly, most surprising headlines from this report: inflation. The numbers were pretty historic, but the story behind the numbers is what's really important for you to understand. Okay, get this. Headline: Consumer price inflation, which is the main way we measure inflation, fell to just 0.3% in October. I mean, that's not just low, it's an all-time low for this particular data series. Incredible. So when you see a number that low, the obvious question, the kind of question you'd get in an exam, is how? How on earth did inflation get so incredibly low? Does this mean the economy is just grinding to a halt? Well, it turns out the answer isn't a wider economic slowdown at all. The entire story really comes down to just one thing: food prices. We actually saw significant deflation in food and beverages. Prices actually fell by 3.7%. And that single factor was so powerful that it pulled the entire headline number down to almost zero. And this brings us to another absolutely critical exam concept: core inflation. You can think of it as the real underlying trend. By taking out the noisy, super volatile prices of food and fuel, we can see the real price pressure in the economy. And that was actually at a much more stable 4.3%. So the key insight here is that the underlying inflation isn't close to zero at all, it's just being masked by this temporary drop in food prices.
So now let's take a look at the financial health of the economy. Think of this as the flow of money and credit. It's really the lifeblood that fuels all the growth and investment we've been talking about.
One of the key trends to watch is what's being called this widening wedge. Bank credit, that's lending, is growing at a pretty healthy 11.3%, but our deposits are growing a little slower at 9.7%. What this gap tells us is that the demand for loans from both businesses and from us as consumers is really strong and even accelerating. Now, this is where we can see if the central bank's actions are having a real impact. This is called monetary policy transmission. So the RBI cut its main policy rate by 100 basis points. That's 1 full percentage point. And look, you can see that banks passed most of that cut on to borrowers, lowering lending rates on new loans by 83 basis points. That's exactly how policy is supposed to work, making borrowing cheaper to encourage growth. Okay, we have covered a ton of ground. Now let's do a rapid-fire revision and consolidate everything. These next couple of slides are pure gold for your study notes, so pay close attention. All right, here are the absolute must-know numbers. The historic low headline inflation, 0.3%, which was driven by that food deflation of minus 3.7%. Remember the much higher and more stable core inflation at 4.3%. Then there's the record high trade deficit of $41.7 billion. And finally, that credit and deposit growth showing strong loan demand. And what about the big picture themes? First, India is showing incredible resilience with that strong PMI. Second, domestic demand is reviving, powered by those FAST factors. Third, the supply side, especially agriculture, is looking really robust. And finally, the financial conditions are in a good spot. They're supportive of growth, with policy working as intended. So what's the final picture here? It's a picture of a really resilient economy, one that's being powered by strong internal engines. But this leaves us with the critical question moving forward. Are these domestic strengths enough to keep powering us through the global headwinds and the clear challenge of a record trade deficit? Well, that's the big question everyone will be watching very closely in the months ahead.